So we're going to give a little sort of blurb about how we've done so far this year, which is just 1 month. It's January. And then Danielle, our mortgage expert, will come in and talk about where she thinks the mortgage market is going to go this year. So for January, up on the screen here, you can see what the benchmark price is. That's not really the average price. That's the benchmark price, which the Calgary Real Estate Board defines as an average house in an average community. So they've got that set at 572. I think the average price is just over 550. We'll go through the numbers as we get into the presentation, but it's a 10% increase over January of 2023. So you can see we've started the year off with some great numbers already, 10% increase. We're going to go, in this seminar, we're going to go through all of the economic factors and population factors and everything contributing to real estate in Calgary, and you guys will understand why Calgary's in such a good position.
Yeah, and we just want to explain, like, Tim and I have been very frustrated in the last couple of weeks just because we've been missing out on deals. And we're very, very excited for people that own real estate right now because they're going to reap the reward. So what's going on? We're just explaining to people in the room. We went after a property in Valley Ridge on the weekend, and Tim and I ran our numbers on this property. It was a smaller starter home property in Valley Ridge, and now Valley Ridge, they do hold their prices in there, but this property was backing onto Stony Trail, so you couldn't get. I mean, the location wasn't bad because there was a pond, then Stony Trail, but you could hear the buzz. So location-wise, it wasn't the best. And then this property also had poly bead piping, which issues may come up over time with that. And then it had pine shake roofing, which is known in Douglasdale. They had huge problems in it. They had to rip out all those roofs. So it's just known to have problems over time. So with those factors, we actually cut off our bid to the highest point where someone's paid for that size home, and we actually didn't get it. So someone out there is buying this property, and you're seeing this all over. So you're seeing it in different communities, and what that means, you're seeing it for half duplexes, you're seeing it for townhouses, you're seeing it for single family homes. So what this actually does is if people are paying the maximum price that a property's ever sold for in that community, it means that more houses will come on the market because people are sitting there, they might be tight for cash, they might be downsizing, they might be thinking, geez, you know what, that price, I know in my neighborhood, there's record prices every week. And I'm like, geez, you know, if someone really wanted to get out, so if there's neighborhoods that are older communities that people have lived there for a long time, they may want to cash in now. So what you're going to see is more properties come on the market, and the demand there is enough to fuel that to keep it going. Okay, and why is that? Because some of these people are coming from places like BC, they're coming from Ontario, and spending, you know, like in Valley Ridge on the weekend, over our bid price of $700,000 for a property that has never sold for that high in that community. They don't even blink an eye doing it.
Yeah.
So that's what's going on, and that's why prices will continue, and that's why you see.
Yeah, and another portion of this slide, you can see the inventory on the right-hand side there. It's down 12%. So 2023 saw our inventory shrink throughout the year, and even now we're seeing it's down year over year 12%. So if the inventory continues to shrink, the price will continue to go up. And well, we'll get into a little bit about what we think interest rates are going to do to this market later on in the year when we go through the whole forecast. But you look at those numbers, inventory, price, it brings the months of supply down, which means there's going to be, you know, less on the market. And the sales, the number of sales are up again. You look in the sold sign there, 1,650 sales. That's up almost 40% over 2023.
And one thing to consider if you do have a property, we reached out to a lot of our investors that are in a position to offload and maybe park that money into something else. This is the time to do it because you're beating the spring market, where normally we don't know what the spring's going to do, but normally the listings would be double, if not triple this in the spring market. So with such low inventory right now, you could capitalize on making that return. And one thing I want to stress, because I'm selling one of my properties that I've had, Tim, for how long? Like since 2006, I've had it. It's in Tuscany, and this property I mean, we just put a new roof on it to get ready for it to sell. But Tim and I walked through it. It's very basic grade. It's not in great shape. It had tenants with pets, so it smells like pets. Anyway, this property will probably go into multiple offers, even though Tim and I were discussing, and I was saying, should we put it as a renovator special? And Tim's like, no, just put it on the market. There's nothing on in Tuscany right now. There's two properties to compare this property on the market. They both went pending, so there's nothing comparing to this, and it'll still be the cheapest property on the market.
Yeah, and Tuscany is a community where it's in high demand. There's always been lots of interest in it with young families. There's all kinds of amenities around there, parks, schools. It's close to COP. It's close to the west side of the city, so you can get out real quick if you're going to the mountains to go camping or skiing or whatever. Those types of communities are going to see high demand continue, which is why if you have a property that's maybe not, been renovated or it's not been cleaned up to selling standards, you can put it on the market and you will attract buyers. They will look past that renovation or the cleanliness just so that they can live in Tuscany. So we'll bring Danielle on right now. Danielle DeMarco is our mortgage expert, real estate investment mortgage expert.
So thank you for the introduction. Today, there's two things I wanted to chat about. One thing is just obviously a little bit about the market, where we're headed. But the second thing is a new mortgage product that came out that's actually a pretty neat product. So I wanted to kind of introduce that and tell you guys a bit about that. So we've obviously been seeing the rates decrease steadily since the end of December. Having said that, we had bond yields that were higher in January for a couple of weeks. And then they dropped a little bit and then they crept back up again end of last week, early, kind of yesterday, I guess, early this week. So what does this mean? Essentially, while the overall trajectory for rates is showing downward, you get these little blips. So if this is the rate line, you get these little blips that go up and down. And so as the bond yields increase, we see fixed rates jump up a little bit, and then we might see them drop back down a little bit and then kind of pop up a bit and go back down. So overall, we're seeing rates come down, but depending on when you end up purchasing, you might see a little bit of an increase in the rate, and then we'll continue to monitor rates and lower them every chance we can. But Q2 is where we're likely going to see some more drastic decreases, I guess. Right now, we're just kind of steady and hanging on there. But yeah, summertime, likely some more drastic decreases. Now, having said that, to kind of touch on this, as rates go down, obviously we start to see an influx of buyers that maybe couldn't qualify before, but now can qualify, or even just the mentality, rates come down and then people decide, oh, well, now might be a good time to purchase because rates are lower, but they were too high before. So as we see that, we start to see more demand. Like Tim and Azad mentioned, there is a lack of supply. So as this happens, we're going to actually start to see prices increase in response to all of these influxes of buyers coming in. So like I always say, if you're trying to time the market for when rates go down, you might actually just end up paying more in price. So you might get a lower rate, but pay a higher price. So really, obviously there's a lack of inventory. You want to be buying the right property, which is what Tim and Azad preach all the time. But you need to be getting those offers in and writing on properties before we start to see those properties increase in value. Because what we can do is if you were to write an offer today, you get today's price. You're not waiting for a month or two till maybe prices increase due to demand. And then we can just watch rates and we can lower them and lower them and lower them up until possession. So you kind of get the best of both worlds. Now, talking about these rates, influx of buyers, prices going up, and what that does for qualifying, I do want to chat with you guys about a new product. So I like to call it the stress test beater. I'm sure my mortgage brokerage and Rika would get upset with me for calling it that, but it is what it is. It's a way to qualify at a much lower interest rate. And for those of you that have been doing your homework, you know that the lower the interest rate is, the lower the stress test qualifying rate is, therefore the more you can spend on purchase price and qualify for. So by using this product, we can qualify at a lower rate to start, which lets you spend a little bit more. So to give you an example, I spoke with a client today And on a regular mortgage qualifying at the 5-year regular rate, he could spend $430,000. That's using the pre-approval regular rate. Now, we redid that same scenario using the stress test beater product, and he jumped up from 430 to 450,000. Now, $20,000 is actually a really big deal. It could be the difference between winning a multiple offer, having to go a little bit over asking, or jumping you up into that next price point. So that $20,000 really could give you a lot of flexibility and leverage when you're writing offers and house hunting. So what is this product exactly? So it's a 6-month term. It's at 4.49%, which is insanely low. And so that allows us, so stress test rate is you add 2%. So if you're taking a standard pre-approval rate hold today at 509, you add 2%, you're qualifying at over 7%. You go with the stress test beater rate and it's 4.49. You add 2%, that 6.49. So you're literally qualifying at more than 0.5% difference. That is again, $20,000, $30,000 of spending money. So then anytime, it's a 6-month term, anytime within that 6 months, you can lock into a 3, 4, or 5-year fixed. So you can watch rates come down. You can wait till the summer, you can see those rates drop, and then you can lock into the 3, 4, or 5-year. So again, it's a great, super low rate up front. The renewal rates, they give you best rates again. It's nothing crazy. But it does allow you guys to get that extra, $20,000 or $30,000 out of qualifying. So if you've been pre-approved, it's important to kind of find out about this product, because if you've only been pre-approved for 430 and the houses that you need to see are in the 450 range, this might help you get there. Or again, like Tim and Azad were saying, if you get into that multiple offer situation, you might be able to go that $10,000, $20,000 more than the next buyer who's looking at the same property, which might help you win that offer. So kind of a neat product, new, learned a lot about it these last few weeks because it is newer on the market, and I've already chatted with a few people about it. So yeah, downward trending for rates. Tim and Azad can tell you, they did tell you about what they expect for the actual real estate market itself. But if you have any rate questions or want to know about this specific product, just let me know.
All right, thanks, Danielle. So we bring Danielle in every seminar so that we can get an insight on how the mortgage market's doing. It's very, very important for real estate investors to keep an eye on what the mortgage market's doing, because of course, your interest rate, your mortgage payment, all determines your cash flow. And what we want to see is every one of our investors' cash flow. That's number one when we take you out and help you buy an investment property, is they have the cash flow.
Yeah. And so the first step, if you're thinking of investing in real estate, the first step is always to work out where you are financially, what you can do. So we advise you to take down Danielle's number. We always tell our clients she doesn't just get you a mortgage, she gets you an investment plan when buying investment properties. And she's helped our clients since 2006, so she's doing a pretty good job there.